This is the briefing for Friday, January 13th. We know that a trend is a series of higher highs and higher lows, or lower highs and lower lows. And I've been showing this weekly chart of the spiders for the entire week. And basically, what I've come to the conclusion is that we have to decide the higher probability of one event occurring over another, which is there's a higher probability we're going higher, or there's a higher probability we're going lower. And this is basically based on the different time frames that you trade. This is a weekly chart. Now, you may not be a longer term trader or an intermediate term trader, but you might be a day trader or a short term trader, in which case you'd use shorter term charts to determine what the main trend is, and then where counter trend rotations occur, and where you can predict that they would basically come to an end and the main trend would exert itself. So the question here is that we see a series of lower highs and lower lows. So basically, when this move ended right here, it suggested the possibility that while this is a run, pause, this could be looked at in a longer term time frame as a run, and that this is the beginning of a greater degree time and price, greater degree than this weekly chart, time and price, counter trend rotation, where you would get a break of the lower highs and the lower lows. So basically, this lower high comes in right around the 410 area, and this move down and then this move up does appear to be developing into a three-step counter trend rotation, where we can predict the potential for equality between legs 1 and legs 3. Now, that equality, it does not always happen, but certainly it comes close in most time frames. There's a higher probability of it occurring than not. So basically, where that would project taking out this high and projecting it up to about the 437 to 440 area. But before that would happen, what would confirm that analysis would be breaking this area right through here, which is 410. That would break that previous lower high, would then confirm the fact that this is, in fact, the development of something greater in degree of time and price in terms of counter trend to this trend down from the all-time highs. So while this is developing still, it's going to be important to watch is what happens if and when it reaches 410. Now, it was important when we paused in here to see a breakout of either to the upside or the downside, and the downside break would have then suggested the higher probability was this trend is still intact, and this was a lower high, and we're going to make a lower low below the October lows, and we'll see the potential for this trend line, this support line, broken. Breaking to the upside suggested the higher probability, or the probabilities become increasing, that we were going up to test 410, and if that's broken, that we're going up to test the 437 to 440 area. Equality is at 447, but we actually could reach the 440 area. Now, looking at where we are a little bit shorter term, these are daily charts. You can see this is the rotational pattern that we were in for most of the holidays. Then we broke out on Monday of this week. We had a retest of the breakout, and then of course the trend continued in that direction. The same thing occurred in the Qs. We have the rotational pattern, the breakout, the retest of the breakout, and then of course the move higher. Now the Qs have broken through 280. Now you can see this is an area of rotation here in the spiders. This is an area of rotation in the Qs, and the Qs have now traded into that rotational pattern, and the spiders have traded into it as well. So basically, we are about halfway through, and the spiders were just really at the beginning of it. So there's slightly a little bit of a slight intermarket divergence, but this does suggest now, with the Qs closing above this 280 level, that the probabilities are such that the Qs now have the possibility of reaching 295, which would be the next level of resistance for them. The problem with this now is that from a price development perspective, everything is falling into place that would suggest that we're going up to test, if we break 410 in the spiders and 295 in the Qs, that we're going up to test the 437 level in the spiders and higher levels in the Qs. But what's problematic with this is we look at price development and we look at price structure, price development and price structure, price development being the direction of the market, the trend, the analysis of the trend, and the analysis of the chart pattern. Price development would be the internals, the strength or weakness of that price development. And you can see that volume is declining in the spiders, volume is declining in the Qs. Volume was even lower today in the Qs and the spiders than it was in yesterday's trading. And market breadth is declining, is diverging as well. So those tell me that I have to be cautious in that analysis of whether we're going up to test the 437 area or even the 410 area. Now, these divergences can be rectified in either way. Either there can be a news event and the internals can increase to support price, or the higher probability is always that price will correct to the internals. So watching what happens here, we're always looking to be long above the previous day's high, but certainly this 388 level in the spiders is very important support. The support now in the Qs is at 280, and then below that is going to be at 270, the beginning of this area of rotation. So we're watching those two areas very carefully. It would be much better after, I think markets closed Monday, but on Tuesday, if we can continue to see a rise in price, that we see the internals beginning to turn to support price instead of seeing volume falling off and breadth falling off as well. So now looking at where we are in terms of a little bit longer term time frame, you can see this series of lower highs and lower lows was a trend. This was a three-step counter trend rotation that corrected this move here. This is a move to the downside. The question is now, if we go back to the weekly chart here, then is this the beginning of the three-step counter trend rotation, where this would even be a 1, a 2, and then a 3 that would come up to test even the 437 to the 440 area. In the NASDAQ, we're looking at the same thing. Let me go back. You can see volume is falling off in the spiders here, which is not positive to the continuation of the trend. In the Qs, we're looking at basically the same thing. If we had a 1, 2, and a 3, it would suggest that the Qs potentially won't make it as far as the spiders will. But the next level of resistance after 280 in the spiders is at the 300 level. And then in the Russell, looking at the Russell in a 1, 2, and a 3 approaching 190. Now 190 in the Russell is really going to be an important area because it would be breaking through then this area of rotation, and that would look then at the potential to test the 200 area, which is this previous high back in August of last year. Looking at where we are in terms of the overbought and oversold condition of the market, we were overbought slightly in yesterday's trading and last night's trading. I discussed that in the briefing. And then, of course, we worked off some of that mainly because of the weakness in breadth. But we are still at a point where this indicator, while it is pretty successful in gauging the overbought and oversold condition of the market, but it only works at extremes, like up here and then down here. Basically, it doesn't give us an indication right now as to whether we could go up or down. We could go in either direction. Now, this is net volume for the NYSE, and you can see that net volume, up volume minus down volume, was down today, even though the index put in a new high over yesterday's high. And the same thing with the NASDAQ. NASDAQ volume, net volume was much weaker in terms of more down volume than up volume, or I should say it wasn't as strong. And normally you'd want to see volume increasing, and you'd want to see an upsloping trend in this, which is what we have at least up to this point, except for today's trading. It looks like that was taken out as well. So as we go back to where we are, it does appear that that analysis is in the process of developing, but I have to be cautious of the fact that the internals are not increasing, the internals are declining, which gives me a little bit of concern, and I have to be aware that while I need to be long this market, at least at this point in time, that I need to be very cautious with my positioning, and I need to be cautious with my stops, because if this doesn't change, if the internals do not change, then it will weigh on price, and price will correct to the internals. Have a great weekend. I'll pick this back up on Tuesday. Markets closed on Monday.